Let's get to the business news now with Emma Hatton, who's in our Wellington studio. Hi, Emma. So another day with some big companies reporting not so great profits. Who have we got today?
Yeah, hi Lisa. We're well into the earnings season, thick of it. It's all very exciting. We had Mercury Energy out today. So the renewable energies firm's profits were down on the year before, down 42%. But if we unpack that, it's not as sad as it sounds. So they made $207 million for the 2020 financial year. Last year they made $357 million, but that was boosted by around about $170 million one-off gain from asset sales. So if you take that out of the equation, their profit was actually up slightly on last year. So, pretty good going for them. They had some hydro issues throughout the year. So there was the drought in the Waikato, which resulted in lower generation from their hydro facilities there. Obviously, lower generation was lower revenue for them. That was offset, though, through lower interest rate and some tax changes. So it did balance out all right for them. Interesting that they've put in their full year results announcement, sort of the outlook resulting around when Tiwai Point exits the industry. It's going to be a big shake-up. So that's always an interesting part to look for. So what Mercury's said regarding that is that they are expecting it to cause some market volatility, some swings in wholesale, market prices. But it's relatively sheltered compared to the ones down in the south, like Contact and Meridian. So all of their generation sites are in the North Island. So they're not probably going to be hit as hard. What is going to be interesting for them, though, is that surplus of power that's going to come into the market once Tiwai is gone, and the power that they were using goes out to the retail market. It's going to make consumer pricing really competitive out there, which is great news for consumers, of course, but hard for them to, retain customers. There'll be some good offerings out there, we expect. So that was a little update from Mercury. The other company that we heard from today was PGG Wrightson. So that's the rural services company. They lost money during the lockdown, just a hit to their trading, basically. Similar to Mercury, their net profit was down on last year, but last year's was boosted by an asset sale. So if you take that out of the equation, their profit was actually up. So they've been hit quite hard because of the depressing wool prices that are out there at the moment. Wool prices are very, very low. Boosted, though, horticulture side of the business is going really well for them. So, they're not getting too carried away, but they're fairly optimistic about their future. They did scrap its final dividend payout, though, saying they'll resume once the market settles down a little bit.
Okay, I'm interested in this platform. Now, this is the thing that was set up so people could show some loyalty to their local businesses, right? You could buy a voucher online and use it at a time when you were released from restrictions. So they've had a bit of a boost, have they? What's the story?
Yeah, so this is the platform that was set up right at the start of lockdown was originally called SOS Cafe, and you could buy a voucher for your local cafe while they were in lockdown, and then you could use it once they were up and running again. So the idea was just to inject the cash into your favourite business straight away, keep them going. Obviously they still had bills to pay at that point. The costs just didn't stop when the lockdown started. And then it was so successful, it spread out and it was offered to all businesses. So it's called SOS Business. And, it just went ballistic. And it was all run by volunteers. It's a not-for-profit. They have 2,500 registered businesses now, and they've done more than $2 million in voucher sales. So the demand actually hasn't really eased since the lockdown restrictions eased. And so, all these volunteers that were setting it up, they had day jobs to get back to and things like that. And it was just really, I think bigger than anyone ever expected. And so they've handed over the website to a US investment firm, which already operates a similar scheme, not quite the same, but what they'll do is they'll basically give the businesses the capital up front and then sell the vouchers through their app later on. So it's a more sure way of the businesses actually getting the money. It's sort of a third-party sales agreement there. And so the founder of the SOS business will stay on in an advisory role just to make sure that, the intent of the scheme stays the same and, the branding will remain and that kind of thing. And this US investment firm is going to put in $5 million for the next year. So that's $5 million guaranteed to be going into small businesses across New Zealand, which, I mean, given the recent lockdowns in Auckland, that's great news for so many out there. It really is quite a good news story, this one, which is really nice to be able to report for a change. And I mean, it's so significant. We keep hearing spend local, support local, and this is just another way that we can do it, and it makes it a lot easier.
Well, what do the numbers on the market say today, Emma?
Market's very happy today. The NZX Top 50 is up 1.5%. That was boosted when Fisher & Paykel Healthcare came out and upgraded its profit guidance for this year. It's doing really well selling its respiratory equipment across the globe. So up 176 points to 11,849. The New Zealand dollar is trading at 65.5 US cents, 90.5 Australian and 49.8 British pence.
Thanks, Emma. That is Emma Hatton with our business news, joining us from our Wellington studio there.